about 1 million questions. So instead of me asking questions, I thought I'd open it up to the audience and let you throw some questions their way.
Hi, good afternoon. I'm Manoj Karkanis. I'm the Chief Exec of Decimal Factor. Decimal Factor is a British bank, authorized and regulated by the Financial Conduct Authority. Alastair, I have this question for you. FCA is one of the most respected regulators in the world. Can we not have an automatic entry into most sandboxes for a company that is regulated by the FCA? I know Eileen spoke very eloquently about having a global sandbox, but that's still not in place. Also, last but not the least, DFSA and the Bahrain sandbox are lovely initiatives and one of the top regulators too. Why can't we have a quid pro quo or something like passporting so that anything that's regulated in Bahrain or that's regulated in DFSA is allowed to operate for 1 year without license in UK and vice versa? Thank you.
Well, thank you very much for that excellent question and timely one. Just to pick up on Jim's final comment about bankers being followers but not necessarily fast, we're pleased with the speed of change in our government and regulatory environment, but it's still a regulator and still a government. We're also a little bit caught up in this funny thing beginning with a B at the moment, and our relationship with Europe. However, you've picked up on something that is right at the heart of some of the work that Eileen and myself and others are doing, which is to get some global standardization around these regulatory environments for fintech and other industries as well. We in the UK in the last year have formed fintech bridges with 4 nations, China, Hong Kong, Singapore, and South Korea, and we're about to announce the next one with Australia, which you'll see announced in the next few weeks. That's going to be one of the more substantial fintech bridges, and it's an agreement to agree because we're not able to enter into an independent free trade agreement outside of Europe while we're going through the Brexit process, although no one's yet worked out who the judge and jury would be, even if we did. But the fintech bridges are designed, and I'll give you my card and get it sent to you once it's announced, to cover 4 key areas. Government to government, so governments talking together about standards and borderless interests of all consumers. Regulator to regulator, so making sure the sandboxes are in sync. Business to business, so putting together panels of businesses to share learnings. And then most importantly, to your great question, people to people, so that we actually have an environment where if someone's a skilled fintech worker, has come through college, done the fintech course, or a mum coming back to work, done the Open University online fintech course, and they want to set up a fintech business and deploy it in 3 nations at the same time, they can move their people around without it being a complex process. So the goodwill and the intention is there. We're hosting in 10 days 93 regulators from around the world in London at our fintech conference led by the Chancellor, Eileen's boss. And we'd love to involve you and anyone else in those conversations because it has to happen.
Another question?
Thank you, Alastair. I want to pick up on this subject, global bridges, which I mentioned this morning. In terms of regulator like CBB today, what they need to do to be hooked to the global bridges, like a global sandbox. Do you see that global sandbox become a reality soon? That's a question. And then I have another question for Open Bank.
Yes, I mean, absolutely. And I applaud the way that the team at the FCA have approached that, because what they haven't done is said, here is a global sandbox, because I think that's not particularly humble. What they've done is they've gone out and said, we would like to form a global sandbox. Would you like to be involved? And if so, how do we create the sort of articles of association together to come up with the right answer? And the response has been phenomenal. So yes, I absolutely believe it's going to happen. We're going to keep the pressure on to make sure it happens sooner rather than later. And having had the honour of meeting your governor and deputy governor of the regulator here, the more we can get you involved in the conversation, the better. But it will happen.
Thank you. Talked about open banking, and this morning I touched this one of the prediction, and we see it is coming for soul to impact banks and impact customer services and customer experience. Now, open bank is still concept, And do you feel there is a solution, off-the-shelf solution will facilitate open banking? Or you have to look at multiple solutions?
Great question.
If you know what I mean. Yeah. I mean, because you need to be connected to multiple solutions. Do you need just to buy different apps? How do you see it impacting banks?
We have seen in the, some of the financial services providers, solution providers, building almost like a shopping mall of applications that you can plug and play. They're almost doing what you would think that the banks would do or somebody else would do, but I know there's at least 3 vendors out there that right now are even taking competing products and put it on their platform to say, we'll help you make this all fit. The challenge right now is human capital. We right now are in a situation that for the next 5 years, I think our biggest drawback to anything we want to do is having the people that can help do it. So the partnering situation goes beyond just fintech. It goes with all the different organizations, even countries. I mean, people ask me, you know, what are the most innovative countries in the States? And they invariably, in my opinion, are all those organizations that right now are owned by foreign government organizations, the BBVAs, the TDs, the Santanders, the ones out west that are owned by the Japanese banks, and that is a problem. And I think when we look at, is there going to be a one solution ecosystem for open banking? I don't think that's going to happen. And there's going to be at least a couple organizations that are going to, for that lack of a better term, jump the shark and say, it is going to go beyond banking. If we constrain ourselves, it's another major weakness. It's a culture issue, and we talked about it this morning, is we are so built on legacy in more than just the platforms, but in our mentality. It is hard to break out of that when we want to innovate. So I look at open banking as very similar to what we've seen in digital lending, where people say they have a digital lending platform, but they end up doing all the back office the same way. They just get rid of the paper. That's not going to fit it. So you're going to see organizations that are going to find a way to bring elements in from other industries to help that make that happen. So I think a standard solution or this is the best open banking solution. It's not going to happen. But we're finding that the providers are finding this is good money. This is a good way to satisfy their customers.
You okay if I add?
No, please go ahead.
Absolutely spot on, and I want to pick up on something that Eileen talked about, which is this shift from kind of wave one of disruptive consumer B2C stuff to the infrastructure and the enablers, which is where the next phase of fintech is going to happen. And because we had such a delicious lunch, which I guess was paid for by the sponsor, I'll give AFS a shout out here, because that's really what AFS do. And if you think about a company that's entire existence is built on just enabling other people to be more successful and plug and play. I think the other point, and some enlightened bankers are really starting to get their head around this yet, it's about Jim's point of new business models and totally new paradigms, right? Why aren't banks thinking about average revenue per user? Why aren't banks thinking about share of wallet? Why aren't banks thinking of themselves as an advertising channel between a buyer and a seller? And it's very difficult when you've historically thought about your siloed product sets and your customer demographics in a certain way to think, well, if I KYC the customer, if I'm the person that's connected the customer securely, and someone else is benefiting from that relationship, what's my click fee in the middle? And final point on open banking, open banking is a collection of a number of pieces of regulation. It's PSD2, Payment Services Directive 2, it's GDPR, it's about giving consumers more control of their data at the same time as the opening up of the APIs. And that's why you've got a perfect storm. If you had just one or t'other, it wouldn't happen as well. Sorry.
No, that's all right. I'll just add one point to that, which I think ties both together. I think I was going to point out that in the UK, there was an actual mandate, a regulatory mandate for the banks to establish and agree an open banking API. So this was actually forced on the big banks in the UK by the regulator saying, you must come to the table and do this. As you might expect, that has taken, 4 years and counting. Exactly. So in the meantime, what you're seeing is the challenger banks and the marketplaces that are being established, and Jim alluded to this, who are already saying, I'm going to work with these different providers for either lending, for topping up, for saving, and I'm going to offer these to my customers. So there's been a consumer-driven or a market-driven need for these people to come to market before the big banks have any incentive to do it, even though they've been mandated to do it. So I think as then Al was saying, to tie it all together, you're going to see more than one open banking sort of solution offered or initiative. The one that's going to win is the one that is going to be market-centric, and because it actually employs some of the other pieces that we're talking about, but offers better solutions for the customers.
And that's a key point, because if you look at the way that mobile banking was built, the banks will continually say that it was for a better customer experience, when reality is it was to cut costs. If the banking industry continues to see open banking as a way to cut costs, they're going to fail, and the fintechs will grow, because unless you take the true market-centric, consumer-centric view and say what is going to be the best for the consumer, not only will they not do banking with you, they won't give you permission to use their identity to build further a bigger ecosystem. Because at the end of the day, we're now becoming much more aware as consumers what our identity is worth, and unless we give value in response to that, unless the banks say, this really is in your best interest, this is done for you on a personalized basis, we'll lose all those elements.
Agreed. Well said.
Oh, and by the way, the Amazon of the world that said they might partner with Chase, what happens when Amazon says, you know what, we're going to give away our Prime delivery service to a new checking account customer, and we're going to give you 5% off all retail purchases? There's not a bank that can compete, because they haven't thought broader than the banking environment, while Amazon can say, I can make that checking account a loss leader and own that relationship and get all the data.
And don't forget, just for anyone that's doubting that, if you go back 20 years to the mobile industry, and the mobile, the two incumbents in the US, AT&T and Verizon, said, we've got the network, just like we had 4 clearing banks in the UK. And then you see an MVNO model light up. So one of the networks breaks from the pack and says, you can use my bandwidth, you can use my network, so you don't need to build a network, and you just white label it and you go get some customers, T-Mobile or Virgin or whoever it is. Exactly the same here, because if it's not your bank that turns around and says, I'm going to white label my back end, powered by like an ABC, another bank's going to do it anyway. And we've seen it in prepaid cards to the bin sponsors. So it's the fragmentation of the industry that's happening, and I thought Jim summed it up brilliantly. Think about offense and defense. Yes, you've got to cut costs. Yes, you've got to have tier 1 capital. You've got to do all the things you do, but you've got to start thinking about new services and you being the rails.
You don't need branches.
Thank you.
Don't need branches.
Yeah. Well, since I'm conscious of time, and I realize that we are between...
I have one final question.
One final question? Okay.
You want to see that? Again to Jim. We've seen the fintech disruption mainly on consumer banking and retail. What about wholesale? What about cash management? What about trade? What about global trade? What's happening in that part of the world?
Lots.
I'm sorry, what is it?
What's happening?
That's for you, Jim.
Wholesale banking, trade.
Oh, yeah.
Yeah, beyond
Shall
retail.
I
Beyond
repeat
the retail.
Shall I repeat the question? Or?
Yeah, I think that is potentially the faster growing area in the fintech, in the open banking area.
Correct.
However, there's already, in everything other than retail, there's already a pretty strong value transfer, and it's harder to unseat when you're talking about a consolidated corporate statement that has all kinds of trade-offs and value propositions. It's a little bit harder to unseat those, but we're already seeing that what's happening with small businesses right now with digital, that it's the fastest growing area of the digital, because I'm a small business owner and there is so much friction. I actually, and this is a states thing probably more than anything else, to transfer money from one bank to another, I write a check to myself twice a month from one account, take a picture and put it in the other account, because it's easier than doing a typical transfer. I think we're going to see it move up the ecosystem, and we already see it in wealth management. We're going to see it in corporate and in wholesale banking as well.
And then just to finish, or come to another area that I would advise everyone to go get looking at is insurance, and the opportunity it presents to a bank. Because as you see insurance fragmented and consumers want to buy insurance by the hour, by the day, going around their house with an app from Trove, taking a picture of a product and saying, I now want to insure that, or giving their son an hour's worth of car driving time rather than signing up to a year. As we've seen with Uber, and I thought fantastic presentation from Michael about Zero earlier, if you get the consumer what they want for free, they will then find a way of paying you a premium for an even better service. It's a totally counterintuitive psychology. Why, when it's raining in London, do Uber surge their prices? Because there's demand. If I could insure my nephew on my car, because he's an awful driver, and I could insure him for an hour, but pro rata, that was going to cost me a 20% surge, of course I'd do it rather than sign up to a year-long contract. So yeah, I think the banks have an amazing opportunity with their digital front end to think about tangential industries that should be coming to the consumer through that brand.
So is it safe to say that retail banking is the canary in the mine shaft? It's the early warning sign of what's to come?
I think it is, and it's still an opportunity.
Yeah, absolutely. Yeah. If we think about how we've been applying fintech to the banks, it appears over the last 3 generations of technology, we're just pouring old wine into new bottles. What's the next generation look like? Why are we replicating the old transactions we used to do? What's new? What's beyond where we are today? And if you could do that in 4 words or less, that would be amazing.
I think the thing we're seeing right now is voice.
Voice.
I think voice is going to be, because unlike payments and everything else, the consumer's already bought into the technology. It's just a matter of applying, and that's where AI and everything else comes in. But I think we're going to see a lot in voice in the next 3 to 4 years.
Okay. Eileen?
I think with respect to sort of where fintech's going, I don't think we're going to be talking about banking in sort of 10 or 20 years' time. It's just a different relationship with people's money. And I don't think millennials or the customers of 20 years from now are going to think about a relationship with their bank. They're just thinking about how they're managing their money, and technology is enabling that.
I think it will redefine our relationship.
Yeah.
Alastair?
Yeah, so if we think about technology as we understand it today as the sort of bottom horizontal here, and we think about financial services in the middle, and then you put Internet of Things on top of it, so telematics, biometric, as we heard on that fascinating demonstration of your colleague or whoever, the digital voice. When you have the smart home sorted, and you have the smart car sorted, and you have driverless cars sorted, you're not going to be stopping and tapping your card to go through a toll booth. You're not going to be doing Oyster to go onto the underground. It's all going to be instant because it's just going to be you. And so I think those technologies coming together, and your iris or your voice, then you're exactly. It just, everything goes away and it's just seamless. You're in the flow.